Real estate versus stock market. What actually built more wealth in the last 10 years? Let me ask you a question. Have you heard someone say, I'm just going to rent and invest the difference in the stock market? Yeah, that sounds amazing in theory. Kind of like saying, I'm going to wake up at 5 a.m., go to the gym, meal prep, and read a book every night. We all know how that usually goes. But today, we're not talking opinions. We're breaking down facts over the last 10 years. Real estate versus stock market returns, tax advantages, leverage, real life examples, and the truth nobody tells renters. By the end of this video, you'll know exactly which strategy actually built more wealth. Let's start with what everyone argues about, the stock market. The S&P 500 has averaged roughly 10 to 12% annually over the last decade. Sounds incredible, right? If you invested $100,000 10 years ago, you'd be sitting around 260 to 310,000 today. That's solid. Real estate. Now, let's look at real estate nationally. Average appreciation 4 to 6% per year. But that's not the full story because real estate is not just appreciation. It's appreciation, loan paydown, cash flow, tax benefits, leverage. Here's the key truth. Stock market equals return on money. Real estate equals return on control of an asset. Big difference. Here's where real estate starts to separate itself. Let's compare apples to apples. I'm going to give you a stock market example. You invest $50,000 at 10% annually for 10 years. You end up with about $130,000. You made $80,000 in profit. That's pretty nice. Here's the real estate example. You buy a $500,000 property with 5% down. That's only $25,000 invested. Now, let's say that property appreciates at just 5% annually. After 10 years, the property equals $814,000. That's $314,000 in appreciation. Wait, you only invested $25,000. That's over 1,200% return. And we're not even done yet. While you're living in or renting that property, your tenant or you are paying down the mortgage. Over 10 years, you might pay down $70,000 to $120,000 in principal. So now your total wealth gain is $314,000 in appreciation, $100,000 principal pay down equals $414,000 total gain. That's from a $25,000 investment. Meanwhile, the stock market investor still has $130,000 total. But I can invest the difference. Oh yes, that's a famous argument I hear as well. I'll rent for $2,500 and invest instead of buying. Let's break this down honestly with a reality check. Rent goes up every year. Your mortgage is fixed as long as you locked it in. For example, a rent 10 years ago was $1,800. Rent today is $3,000 plus dollars. That's $1,200 a month increase, $14,400 per year extra. Where exactly are you investing the difference? Tax benefits. This is where real estate absolutely dominates. The real estate tax benefits. You have mortgage interest deduction, property tax deduction, depreciation on investments, 1031 exchange to defer capital gains. You can make money and reduce taxes. Stock market and taxes. You have capital gains taxes, dividend tax. You make money, you pay taxes. No real shelter. For example, a real estate investor makes $50,000, writes off depreciation, pays taxes on maybe $20,000 or less. Stock investor makes $50,000, pays taxes on the full amount. Cash flow. Stocks don't pay rent. Real estate, monthly income. Stock market, maybe dividends, usually small unless you have serious money. Here's another example. You have a rental property. It cash flows $500 a month. That's $6,000 a year. That's $60,000 over 10 years. Added to everything else, volatility and control, the stock market, 2020 crash, 2022 drop, emotional selling, you have zero control. Real estate, you control rent, improvements, refinancing, exit strategy, and people don't check Zillow every 5 minutes like you do with your stocks. Real truth, it's not either or. Now, let's be real. The smartest people don't choose one, they use both. Ideal wealth strategy: buy real estate early, build equity, plus leverage, cash flow grows, then invest in stocks. Why, you ask? Real estate builds the foundation, stocks build the liquid wealth. Here's the final breakdown. Who really won? Over the last 10 years, the stock market gave about a 2.5 to 3x return. No leverage, taxable, no control. Real estate, 10x returns with leverage. Tax advantages, cash flow, for savings, control. So next time someone tells you, I'd rather rent and invest in the stock market, you can tell them, that sounds great, but you're missing the biggest wealth building tool in America. Real estate isn't just an investment, it's a wealth multiplier. If you're in New Jersey and want to buy your first property, house hack, or build a real estate portfolio, reach out to me directly because the biggest mistake you can make is waiting another 10 years.